as risks mount, India's GDP growth is expected to drop to 8 to 8.5% in 2022-23. Despite a rise in COVID-19 cases and growing prices, India expects its economy to expand by 8% to 9% in the fiscal year beginning April. At that rate, India's economy would expand the quickest among big countries next year. The government's annual economic assessment said Monday that rising agriculture and industrial production growth helped Asia's third-largest economy overcome obstacles. The study, presented by Finance Minister Nirmala Sitharaman ahead of Tuesday's annual budget, warns of global inflation and pandemic-related threats. India has to be mindful of imported inflation, notably from rising global energy costs, said Sanjeev Sanyal, the report's primary author. With global petroleum prices nearing a 7-year high of over $90 a barrel, India's consumer demand may be affected by inflation. The global climate remains unpredictable, the study added, noting the US Federal Reserve's anticipated reduction of monetary assistance. Capital may leave India if rates rise abroad. The analysis assumes regular rainfall and a controlled drawdown of global liquidity by major central banks. Considering increasing inflation and weak domestic demand, private economists say the government and central bank will have to balance their growth efforts. Policymakers would struggle to combine economic and price stability goals as monetary policy items, said Romki Majumdar, an economist at Deloitte India. The study claimed the government has budgetary room to give more help if needed, noting a 67% rise in income from April to November last year. After declining 7.3% in the previous fiscal year, India's economy has improved after the government removed mobility restrictions in June. Following an early month rise in Omicron infections, several private economists and the IMF reduced growth forecasts to 9% from 11%. The yearly report, which assesses India's economic progress and updates projections, has often failed objectives. Last year it predicted 11% annual economic growth, which was eventually cut down to 9.2% by the Statistics Ministry due to the Omicron variant's impact. Since the coronavirus pandemic started in early 2020, private spending, which accounts for over half of GDP, has been poor.